All right, everyone, here we are with another video with Invest for Tomorrow, and we're going to talk about ticker symbol NNDM, Nano Dimension, NNDM stock. To all the first-time viewers and investors, welcome to the channel, and to all the subscribers, welcome back. And as we dive into everything we have to see here in this chart and in this stock, I do want every single investor and viewer to stay tuned on in towards the end of this video. We're going to cover about the S&P 500 index and why it ran up, and how it reacted this week and what to expect going into next week. We're also going to talk about the 10-year treasury, and we are also going to cover some articles talking about the market and how it reacted today. If you guys want to know what ticker symbols I'm watching and you can add to your watch list and keep on your radar, you can go ahead and join me over at the Patreon. I will be posting weekly stocks that I'm watching that I believe have potential, and there's no better time to start watching stocks as they're going down and doing your research and understanding these companies while the stock market is going down, because there's no way you can have the feeling of fear of missing out. Why? Because the stocks are becoming more and more discounted and the opportunities are becoming endless. So if you want to know stocks to watch before this market starts to recover and come back up and make gains that you have not seen before and take your portfolio to newer levels, you can join me over at the Patreon. The link is down below. So here we are with NNDM breaking through support, turning it into a resistance, then broke right back through it and hanging out kind of a little bit below yesterday's resistance levels. But it's getting close to the tug of war zone here with the 50-day moving average. Now, I do want every single investor and viewer to be aware that the overall market hit its all-time lows of the last month or so and then bounce back. Now the question is, could these numbers hold themselves up? And that's what we're going to look at towards the end of this video and what we need to be aware of. And that's why these supports and resistance are important. But let's look at how ARK Invest reacted today. So one thing here that I noticed with ARQ is that their position is going to scream a lot of bold statements here. Now, let's look at it and we'll talk more about it in just a moment. So RQ on the 4th, 7,109,171 shares. Now, when we go over to the 5th on RQ, you can see here Nano Dimensions, 6,901,307. Now, there are ticker symbols within this list that they're adding positions to, and we're talking about hundreds of thousands at a time. And Nano Dimensions has been unloaded hundreds of thousands at a time, and it's making me, see how truly their conviction is about Nano Dimensions, or, they see this being one of those opportunities that's like super long term, and they need to make quicker gains right now, and they can't be in this sector. Not that Nano Dimensions isn't as important, but the way that ARK Invest unloads is the way they've been unloading Nano Dimensions. I hope I'm wrong, but I mean, that's 200,000 right there that they've unloaded in just one shot. And I wasn't going to be surprised if we saw this hit anywhere near 6 million. 0.5, 6 million, 0.3, or even 6 million. But once this hits like 5 million, even though that's still a large position, that's going to make me think a little different about how bold they were making their statements in the past, right? About Nano Dimensions and how they felt about it. And now they're being a little bit more hesitant or less interested per se. Now, they still own a large portion, right? And a large amount. I mean, they had a lot more shares that I'm actually a little concerned about, because they've already unloaded close to 500,000 or more shares just here in RQ, and collectively it's been a lot more than that between both ETFs. So let's go ahead and look at how ARKW reacted from yesterday to today. So ARKW on the 4th, they had 5,877,298 shares. This one broke through the 6 million mark into the 5 million. And let's see how the 5 million went ahead and reacted today. So ARKW, the 5th, Nano Dimensions, 5,714,737. Now, when you look at that and you do the math there, you know, that's another 100,000. So just between these two and one day, 300,000 shares unloaded. And I've been looking at the others on the same ETFs, and they've been loading up 200, 300, 400,000 on some of the ones that they truly believe on. And I've even seen them go up to like 500,000 on certain stocks. So that's making me concerned. Now, I was always excited about seeing Nano Dimensions on this list because this is a disruptive list. This is a list of stocks that have so much potential. And for it to qualify to be here, it was a bold statement, but it's at the end of the list right now. I mean, it's been fighting to try to work its way up within this area, but I mean, now it's literally at the end of the list. And, you know, I wasn't surprised to see Nano Dimensions reach like the top 15, the top 10 on this list, and then now it's losing that traction, and then they're unloading it. So very interesting to me. I don't know how that makes you feel as an investor, but they've unloaded about 300,000 shares. And we've been talking over at the Twitter and also myself in most of my videos that you got to find stocks that you understand and give you the conviction that when the stock is going down, you feel comfortable getting more. And the stock has been going down, and yeah, they bought around here on the 23rd and 24th, and they did it like a quick day trade or swing trade here. And then since then, they've been unloading, and you just saw Nano Dimensions hit its lowest point since way back here, right, in December, in the last like 3 months and a half, and you didn't load up the boat and you're unloading. You know, that's a bold statement on the opposite side of things. But I know a lot of investors are bold about this one, and their conviction is strong, and they love this stock, and I am not taking away from this stock the potential that it has. But you know, I like to watch ARK Invest and how they react and how they're speaking through their actions. So let's see here the support. The support is 651. If that gets broken through, this could be on its way down to newer lows, new support levels. You certainly want to watch this carefully and see how it reacts. Now, if that gets broken through based off the history of the chart, your next point of reference would be down here at 615, almost down to $6. So keep that in mind moving forward. But before getting to those numbers, 651 is your first support level. Now, this run up here, we missed a rejection here, and the resistance level, or the highest point from the day, was way up here at 808. That definitely needs to be broken through. But before getting there, right here at this point, 771 needs to be broken through, turn into a support, and so the bulls can get closer to the 50-day moving average, which is 789, to then get back into bullish territory. So that is a very important point, 771, and the bulls need to break through it, turn it into a support, but it does not signify or guarantee that the bulls are getting back into bullish territory. This is just a stepping stone and an indicator for us investors to know that this momentum is continuing upwards. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watch this video. Stay tuned to the very end. There's a lot of information to cover, and I won't want you to miss it. We're going to cover about the S&P 500 index. We're going to look at an article talking about what made this run go up, how the S&P 500 index and the other indexes are doing, and the 10-year treasury bond. So stay tuned for all this information. So we have a lot to cover here, and we have the S&P 500 index here in front of us. And what I want us to be aware of is the fact that, yeah, today there was a run. We need to see if this run can hold itself up, and how quickly is it going to actually eradicate itself. Because when I look at the chart, I look at it this way. What do I see, and what is it showing me, and what is it that the chart is sending a message to me about? So the first thing is, I've been looking at the peaks, and every time we hit these peaks, right, we go ahead and dip harder. Now, a lot of investors say that 10% to maybe almost 15% is a correction. 15 to 20 is starting to get closer to a crash, and 20 and beyond, we certainly have hit the crash territory. Now, one thing I do want us to be aware of is we almost hit 4,000. We hit 3,950. So I would go ahead and just round this up to 4,000, and 10% of 4,000 is 400. We are only around 250 right now. Even though we've been going down and up, down and up, down and up, we're still at 250. So I still see room here if we are in the midst of a correction, right? We need to see. Now, the reason why this ran up, which we see here in our articles, is the fact that dip buyers fuel stock rebounds. So that's the first thing. There are people buying the dip, right? Retail investors, institutional investors, and so forth. Now, the second thing I saw was the fact that there was a rise because of the solid jobs report. I've said this in my other video that I posted. I'm really glad to see this because this is showing not just economic growth or anything like that, or possibilities of an economic growth, but our population, right? Our country as a whole. Jobs reports are looking pretty solid, or a little bit better than expected. It's not all about the market. It's not all about us making gains. It's also about our country and our people. So that's cool. Then we also have massive fiscal stimulus and vaccination drives. Those are the two other things driving the market right now, which could be the fiscal stimulus could be a temporary run. Vaccination drives could be temporary as well, just for a few weeks or months. So that's something we need to think about as well. And then we have here our 10-year treasury. So when we go to the 5-day, you could see it here. It's at 1.55. Watch, it's going to spike up. And this is what the article was saying as well. Watch. It only took a few minutes. There you go. There's the jump. So what it was also saying here was, yeah, the dip buyers fuel the stock rebound and treasury stays steady. So when we look at the treasury, right, on the 1 day, it was pretty steady. It was kind of going downwards and hanging out sideways until the last couple hours of the day, which we're going to look at right now. Just pay close attention. There you go. There's the spike. 1.5770 right now. And then we put the 1 month, it's going to spike up higher. So when we look at this, we've been going higher and higher, and this is not going to show its effects yet, probably for the next few days or weeks, or we might see it as early as Monday starting to affect the market if it stays around these levels or actually goes higher. And then the S&P 500 index is going to do what? It's going to actually start to go in the downward direction again. And yes, these jumps here are holding up the market from going in a straight arrow down. But the fact of the matter is that we continue to go in that same direction. And that's what we want to watch for. That's what we need to look for. And that's what we need to be careful about here and not get too excited. Now, if we see some consolidation for a few days or a week, then it's probably something showing strength and saying, hey, this might have been the bottom, and every single dip buyer that fueled up the stock rebound was onto something. But right now, I'd rather be a little bit more hesitant and miss out on catching the dip or catching it rebounding from the dip, and just kind of watch and see if it hangs out in the same area before making any decisions. Now, I do want every single investor and viewer to be aware that if you're a first-time investor or a beginning investor, these type of corrections and crash, they tend to happen in the market. I mean, we went through several of them throughout the year last year, back in September, October. We even went through one in June. Now, the thing about these corrections, quote unquote, that are healthy is because of the fact that when these corrections happen, it allows for bull markets to begin or actually start to stir up to go to newer levels. Now, every single investor before the 2020 market crash had to have diamond hands. That's where that saying comes from, or strong willpower to not sell and quickly, get out, unless, you've been investing since way back here, since 2008, and you thought you were going to eradicate all your gains, and you took a small hit there, because from 2008 to there, that, everyone's investment mostly would have probably multiplied, anywhere from 3 to 5x on the low end, and on the high end, 5 to 10x or more. So that's probably someone that went ahead and got out. But anyone that was investing here in 2018 and felt that correction and then started to ride that bull run, and then here in 2020 panicked, they learned the behavior. It takes a few years to learn the behavior. So anyone that got in after this dip and you're feeling a little bit worried about this dip, this is where you're supposed to learn, and you're also supposed to think about the stocks that you're in. Do you understand them, and do you see yourself holding them more than a month, more than 6 months, and more than a year? It's very important to understand that about the market. You could do speculative plays. You could do penny stocks if you want to. That's not financial advice. I'm not telling you guys to buy, sell, or hold any type of stock. That's an opinion if you want to go ahead and do that. But you need to have a portfolio as well that gives you a foundational ground to understand what your goal is as an investor long term. So these pullbacks, the one we're going through right now, if you feel like it's a big thing, don't worry about it compared to the long run. I mean, look how many times we've been through small corrections or even a crash, right? Like the one we saw in 2020. So any new investor or beginning investor, this is where you're supposed to learn and not run, okay? Because if you ran back in 08, you would have missed this run. If you would have ran back in 2015 in that dip, you would have missed this run. If you ran in 2018, you would have missed the run from 2019 all the way up to 2020. And if you would have ran from 2020, you would have missed the dip from here to 2021. And I will be saying a story in 2022, 2023, 2024. If you ran from the dip in 2021, you would have missed the bull run for all these last several years. So definitely that's a message to every learning investor, beginning investor, and even experienced investors that are being a little bit hesitant or being discouraged by the market's movement. This is normal behavior. It's part of the market, but this is why you need to know what stocks you're in and which ones give you the conviction to stay. And this is where you're supposed to get the opportunity to go ahead and load up on more shares the more you can. Now, let's talk about the tweet of the day. So the tweet of the day was, what two catalysts so far in the last week have made the stock market reach these lows we have seen? Do you believe the market will have a slight jump tomorrow or continue its trajectory, how you were supposed to go ahead and pronounce it and write it, but I went ahead and put trajectory and the word tragic in front of Tory. So everyone's looking at it as a tragic pullback. This is not so far anywhere near a crash. We're in a correction. And the two catalysts that have happened so far, and thank you for the one person that went ahead and commented how they felt and what they were stating. But the two catalysts that have happened so far is the fact that the treasury bonds, right, the 10-year treasury and all the other ones, they spiked up pretty fast. And then also the date that Jerome Powell came to speak and try to ease things off, and it did the opposite. But today we're seeing the effects. I guess everyone slept on it and they took advantage of the dip and they bought more shares, and the S&P 500 ran up a little bit. But I do want every single investor and viewer to be aware that we need to watch this carefully. We do, and there is room here if we're in the midst of a correction for it to pull back a little bit more. So what do we do now? Well, my best advice is to pay close attention to the market. Start looking for stocks that you want to learn about or you once wanted and invested in, but it was so overpriced and now it's looking like an opportunity. A stock that was probably at $50 and it's at $20. A stock that was at $30 and it's at $20 or $15, and you have a conviction that it could grow. Look into those stocks. Do your research. This is the time to do research and have all the time in the world to not fear of missing out. And that's one of the best things about pullbacks. Now, hopefully we're not in a crash and we're in a correction, but prepare yourselves. Be prepared and aware. As always, guys, thank you guys so much for watching, and let's make some money.